Welcome to International Securities Exchange's podcast series. Facilitated by renowned educators, ISE podcasts are intended to teach beginning as well as seasoned investors the ins and outs of trading. To find an updated list of podcasts, please visit www.ise.com/podcasts. Please be sure to listen to our important message following this episode regarding the risks of investing in exchange-traded options.
Welcome, everyone. This is Steve Meisinger, your host for the ISE webinar series. And I'm really pleased that we have John Person with us today. John will be talking about volatility, mastering the uncertainty in today's Forex market. John's been with us numerous times, always delivers a great presentation, so I'm really looking forward to listening to what John has to say today. He's spot on in his view of the FX market, so I'm really glad to present John Person. He's the founder of nationalfutures.com, and of course you should check out his website, but John will talk to you a little bit more about that. Hey John, how you doing? Steve Meisinger here.
Stephen, how are you doing, sir? Great to hear from you.
I'm doing great. Thanks again for joining us. Really appreciate it.
Well, we got some exciting stuff and stuff that's working, and a lot of people hopefully will benefit, or the ones that are here today. So thank you for inviting me.
Well, you're welcome. Why don't you take it away?
Excellent. Folks, my name is John Person. Some of you may or may not know of me. I've been around the market since I started on the floor of the Chicago Mercantile Exchange in 1977. I worked for a gentleman by the name of George Lane for a few years. He's the man who is credited with creating the technical indicator we now call stochastics. So working with George, I was kind of acclimated to the fast pace of trading, and I think that's what kind of, sharpened my trading skills for today's volatility. Was back in those days, commodities were flying all over the place, and so now that we have an insane volatile type environment with a lot of the commodities moving at unprecedented pace, I would have to say, folks, that we are really blessed if we know what we're doing and taking advantage and embracing the volatility, because it's really tough unless you're writing options. And even if you're writing options in a market that doesn't go anywhere, you're not going to collect a whole lot of premium. So we really do need volatility. And if you can master the risk and if you can master your own emotions, picking out certain trades, you don't have to trade every single day. You can look for some seasonal trades, and that's one of the things that I want to discuss today in a follow-up from the last time I did a presentation, because really, truthfully, the markets have been, believe it or not, adhering to the semblance of seasonalities in the foreign currencies arena with amazing accuracy. So it's something that I was involved in the early ages of trading, number one. And number two, we really did, if you were trading commodities back in the late 70s and early 80s, folks, the only place to really trade foreign currencies was at the Chicago Mercantile Exchange through a futures account. So before today's presentation began, Steve and I were talking. Steve said, hey, did you see the Swiss franc? And I'm like, quite frankly, I haven't traded the Swiss or looked at the Swiss since probably 1985 because I've had my hands full in other markets such as the euro and the yen, which have had some pretty amazing moves. And those are the two I'm going to focus on today because, A, I believe there's further opportunities in both of those markets coming up. So today is something that I'd like to share with you, how you can look for the next opportunity and explain what the next opportunity that I'm looking at really is. So thank you for being here, and I'm going to try to make some time available at the end of this presentation for questions and answers. This is a risk disclosure statement. And in case you're not familiar, trading is risky. What we are attempting to portray here is information for you for educational purposes. This is information that's unique to me. This is something that I've put together, and I'm going to share with you some concepts from my own proprietary trading system that I developed. Well, first off, with the ISE and the options, if you are trading an equities account, I'll be honest with you, the exchanges, I'm not on anyone's payroll. I do trade independently. I am an author. I've written many books on trading and technical analysis and designed some trading systems. I've been invited to speak around the world, actually, because of the ideas and my unique concepts that I developed. And one thing that I'd like to say is that with wherever you're trading, whatever product you're trading, the difference between futures and equities and exchange-traded funds and looking at products like the ISE FX option concept and contracts is just a matter of taste, but there are certain nuances we all should be accustomed to, as I'll disclose today. We can borrow information from trading from the futures and apply that information and apply it towards other products, such as the ISE FX options. Truthfully speaking, options on futures are relatively thin, and I think you get a little bit more bang for your buck in trading some of the equity options, and they're better priced and their pricing model. So it's something that I think that you can enhance your trading by saying, okay, am I going to take a swing trade or a position trade? And if so, maybe I could look for a longer-term trend direction or a seasonality within that trend direction and apply it towards an FX option such as the ISE. And the beauty is that, quite frankly, ISE has a lot of phenomenal opportunities with those options based on bid and asks, and I'll show you that as well. So it is something that you can all look at. Here are the products that they trade: the Australian dollar, the British pound, the Canadian, the euro currency, the Swiss franc, and the Japanese yen. Now, all are quoted in dollar denomination. Now, the trick is that some of the commodities are quoted in the reverse. So, for example, when I show you a futures chart in a few minutes on the euro currencies, it's not USD to the euro, it's euro to the USD conversion. It's just a matter of understanding the relationships. Now, as far as trading, some of the questions that I get a lot of from people is simply this. A lot of people have a hard time not getting into a trade, it's getting out properly, whether it's their risk was hit or where do they take a profit. And I think what's really important is that if you have that issue, you have to understand that, you know, the phrase, the trend is your friend. How do you stay with a trending market condition? And most traders don't know how to identify that. Well, the first thing is, and the first answer I'm going to give you is, the beauty with trading foreign currencies is that they do tend to have exhausting trend conditions, exhausting to the fact that you think it can't move any further, and it certainly does. It continues that trend. So when to identify when a trend exhausts itself or ceases to exist, it's interesting because through time and a lot of other technicians, there's a term you may hear, cause and effect. What's the cause and what's the effect? Is there an accumulation bottom? Would the effect be a longer-term breakout, so to speak? So as far as a technician is concerned, we look for markets that have a tendency to, if they do have longer-term consolidation phases, then they generally will have a longer-term trend phase when they do start to break out. And that's a technique, or at least a tip, that you should be able to remember just off the top of your heads, and just ask yourself before you get into a trade, if I'm going to figure out where this thing's going to go, I must be able to look at where the heck has the market been. And you go back and you look at your charts from a longer-term perspective. Most traders have a hard time doing that because they're so wrapped up in the intraday volatility that they forget, hey, where's the market been? Where's the euro currency been? Where's the British pound been in the last, say, 1 year, 6 month, 5 year length of history? And it's kind of hard to get that length of history information when you're looking at some of these newer products, except for going back and looking at futures. And there's a lot of places that you can look at historic futures data, which we've been trading foreign currencies since the early 70s. So we do get a lot of, and have a lot of, historic data.
Thank you for listening to our podcast. To find more podcasts on options, stocks, alternative markets, and market data, please visit www.ise.com/podcasts.